Well, welcome folks to the live call-in with the Pennsylvania Insurance Department, hosted by both the Pennsylvania Association of Mutual Insurance Companies and the Insurance Federation of Pennsylvania. And we want to thank the Insurance Department for making themselves available to the industry to talk about the issues that are affecting our day-to-day operations. The way today's presentation is going to go is Commissioner Altman is going to give a quick update on some of the issues that they're facing. We'll go through some of the technical things that you need to know on how to ask questions. And then we're going to turn it over to the Chief of Staff of the Insurance Department, Mike Humphreys, who will sort of handle the rest of the today's call. We do have a hard stop at 4 o'clock. We'll try to get through all the questions and answers, questions that we receive before that. With that, I'd like to introduce Commissioner Altman. Commissioner, thank you once again for providing your staff, all the deputies here, and the other key people within the insurance department. In fact, our entire senior legal staff are also on the call too. So this just shows how important this is to the department and to the governor's office. So, Commissioner, it's all yours.
Thank you so much, Ron, and thank you to Ron and Sam once again for coordinating this call on an ongoing basis. I think it's incredibly important during this time with all that we are dealing with as the Commonwealth and the insurance department, but all that we are dealing with as an industry and a society right now to have these forums for open discussion, for troubleshooting and collaboration. And, we welcome sort of doing this on an ongoing basis, particularly during this time when questions just keep seeming to arise. As we talked about last week, our goal right now is to be as responsive as we can be, to answer questions as quickly as we can, to put out more expansive guidance in a timely manner to the extent that more expansive guidance is needed. And we're going to be talking more about some of those things today. We had guidance go out earlier today related to agents and in-person sales, which is prohibited under the governor's life-sustaining business guidance. So continuing to work on that. And, we have not seen quite as many questions, I think, in the past week than we did the week before the prior webinar, but I encourage you to continue the communication. We've also heard a number of updates and questions and flagging things that individual companies are doing to be responsive during this time, to provide better service or flexibility to their policyholders, given the unique circumstances of this time. And first of all, I want to thank those of you who have done those things, who have shared those things with us. It is very helpful for us to keep a finger on the pulse of what industry is doing and the decisions that you all are making for the betterment of your policyholders. So please keep doing that. This is a time where all elements of our society, the financial services sector, in addition to all of the other sectors, really need to come to the table with ideas, with solutions, with contributions. And so hopefully that is certainly the attitude that we, the department, are taking to it. What can we do to make this better? And I know many of you are doing the same. So thank you for that. And please keep it coming. With that, I will turn it over to Mike Humphreys, who's going to, I think, MC the rest of the call. Mike.
Thank you, Commissioner, and good afternoon, everyone. So we don't have as full of an agenda as we did last week, so we should have more time for Q&A. So as a reminder, you can submit questions by clicking at the bottom of your screen. And we'd prefer that you do that through the Q&A box versus the chat feature. It's more of a challenge for me to try to monitor both. So really that's only a personal preference, but if you could continue to submit questions the way we did last week through the Q&A, that would be great. So what we did want to talk about before opening it up though, is the press release that we issued earlier today, and then some forthcoming guidance specifically to auto insurance companies that should come out probably tomorrow or Wednesday, that I'll have John describe in more depth. But starting with the agent press release that we sent today, this is really a continuation of the life-sustaining business order that we've talked about in the past week, and as the commissioner just mentioned. Just to clarify again, the businesses of insurance is life-sustaining, but in the governor's order, it specifically lays out that in-person sales and brokerage are not designated as life-sustaining. We put out the press release today to caution particularly insurance producers that going door to door in soliciting or negotiating insurance business is prohibited under the governor's order. So that may be something that we think all of you with captive agent forces may want to reinforce to your agent communities, and also those of you that rely more heavily on independent agents, to remind them that in fact they shouldn't be in the office and accepting in-person visits, nor should they be going out into the communities to try to solicit. We separately have talked to insurance agent representatives, and the ones that have reached out to me have all told me, yes, we've closed down our office, we have signs on our door on how to make payment or how to reach us, providing phone numbers and that sort of thing to maintain their continuous life-sustaining business, but without having to get into person-to-person situations to help mitigate spread of COVID. So you should see that if you're signed up to receive our press releases. That went out today. The department will be looking at any complaints that we receive related to the in-person sales, particularly those that are solicitations that come up to one's door. And as continued and upon the first violation, we'll be reaching out directly to the agent. And if actions continue, then obviously the department has a series of disciplinary actions that we have on the table to potentially address the situation in the future. So happy to answer any questions on that when we get to that point. But I will turn it over now to John to talk about the auto guidance that you should see in the next week.
Yeah, good afternoon, everyone. For those of you who don't know me, my name is John Lasik. I am an attorney here with the Pennsylvania Insurance Department. We are about to issue guidance in relation to auto insurance written in this Commonwealth. In the first part of the guidance, really kind of what animated this guidance is an announcement by one of our sister agencies, PennDOT, that kind of in response to some of the mitigating actions that all of the Commonwealth executive agencies have been taking, PennDOT has closed many, if not all, of its testing and photo and licensing centers. As a result, this has led to, people unfortunately are having their driver's licenses coming due for expiration here during this period when PennDOT offices may be closed. As a result, PennDOT has issued guidance that any license which is expiring between March 16th and April 30th will be extended until May 31st. So if you have insureds who have their licenses that were set to expire anytime between March 16th and April 30th, that license will now not expire until 5/31, May 31st. The reason why we wanted to issue this guidance is because we know that there are a lot of underwriting rules and rating and the like that will negatively impact a consumer should their licenses expire. As the PennDOT guidance, I believe, makes very clear, these licenses, even though the physical card says their expiration date is sometime between March 16th and April 30th, those licenses have not expired and they have been extended until May 31st. So what we expect of the insurance industry is essentially to follow the guidance that's been issued by PennDOT. We expect that any license between March 16th and April 30th that expires should be treated as a valid insurance license until May 31st. So we would not want to see declinations. We would not want to see rewriting or anything of the like, because pursuant to the issue or the guidance issued by PennDOT, those licenses have not expired. So keep applying your rules and your underwriting rules and your rates consistently with this guidance. Anyone who has come up between March 16th and April 30th, their license is good until May 31st, and we do not want to see cancellations or non-renewals. Or any other kind of negative application of underwriting rules or rating rules. One important thing to note, when this extension first occurred, it was for a very limited period of time, considering 2 weeks of PennDOT office closures. As some of you may have seen today, those office closures have been extended. And as a result, PennDOT has also extended the renewal date. So originally the licenses expirations were extended until April 30th. Just yesterday or the day before, they issued guidance saying that those would now be extended until May 30th. So we encourage you folks to track PennDOT's guidance. They may extend this again, and we may not necessarily issue another notice informing you of the extension. So we would really expect insurers to keep up to date on this. We encourage you to visit PennDOT's website. There will be a link in the notice which will link you to PennDOT's COVID-19 pandemic guidance. This will include guidance on how long testing centers will be closed, how long licenses will be extended to, and the like. And then just one other note that's worth mentioning before I move on to another subject of the notice here is that this guidance applies to both commercial and personal auto or commercial or personal driver's license issued in this Commonwealth. So it makes no difference whether this is a personal driver's license or a CDL. In any event, these licenses have been extended until May 31st. And I think that's important because we want the industry to understand that the guidance that we are going to be issuing here soon applies to both commercial and personal automobile policies where applicable. Now, you might ask, well, what does that mean where applicable? When I get into these other points, there are certain things that simply won't apply to commercial policies, and so we understand that. But in general, our guidance applies to both commercial and personal auto policies which have been issued in this Commonwealth. So as I said, the main guidance here was to inform industry of what PennDOT is doing and to remind industry to follow your rates and rules as if these licenses did not expire until May 31st. That being said, we have been fielding a few consumer complaints and some just general inquiries really about certain topics in the automobile segment of our industry. And so we thought that this would be a good opportunity to also communicate out to industry what we are seeing and what we are expecting of industry. And the first item that we are seeing, that we've seen inquiries about, are eligibility requirements for discounts such as good student discounts. As everyone knows, schools by and large have been closed here in the Commonwealth. This includes not just your average primary education or secondary education, but universities, colleges, all kinds of schools have either shut down for the semester or have moved to online instruction. Part of the issue that we've seen here and that's been brought to our attention is, what if I have a good student discount, but I'm having difficulty obtaining evidence of my good grades to submit to my insurer? Or what if I have a good student discount, but now school's been canceled and therefore, I'm not technically a student at this point? And the first point that our guidance is going to address here is we would like to see insurers review their eligibility guidelines and to work with their insureds to ensure that folks who cannot necessarily prove their good grades right now through no fault of their own, either because school administration office is closed or they just physically can't get the grades, or because they maybe don't technically meet the eligibility requirements, again, for things that aren't their fault, we want to make sure the consumers are not penalized for this. So we encourage all insurers to take this into consideration. Think of this as an issue which might come up, which you might have policyholders address questions to you. And we really would like to see you reviewing your guidelines, reviewing your eligibility criteria, and showing the flexibility that we've come to expect, and the flexibility that, quite frankly, we have seen so far in the industry, and making sure that consumers are taken care of in this regard. And so that's the first item that we wanted to address outside of PennDOT's guidance, is these eligibility requirements. A second item that we wanted to touch on, which I don't think is going to be a surprise to many folks here, it's more of a reiteration of earlier guidance that we have, but a little bit more specific, is there have been some considerable job losses due to the COVID-19 related business disruption. On March 26th, the United States Department of Labor released its seasonally adjusted initial jobless claims. Those came at a record 3,283,000 initial jobless claims. So that's approximately 3.3 million people who lost their job just last week. We can understand that this may have a negative impact on certain insureds' credit scores. And what we would ask insurers to do is to review the application of credit scores to rates that you have developed, to ensure that we're not unfairly punishing insureds who have been furloughed or released from their jobs, again, through no fault of their own. Many of the folks who are in the initial 3.3 million people of the DOL survey are your service workers, or who have been lost their jobs simply because the industry that they work in has been forced to shutter its doors. We don't want to see people being punished because of that. And so we would encourage all insurers to understand that, 3.3 million read for initial jobless claims is the highest it's ever been on record. And we hope that those job losses are temporary, and that people can get back on their feet. But at the same point, we understand that there will be some negative implications on credit scoring, which we know feed into a lot of the rate modeling that you folks have. At this point, we would ask you to review those rates and the application of credit scoring, and to see where you can work with your consumers to provide the flexibility in this time. Going as well to rates, another point of our forthcoming guidance is going to be just a note here on some of the realities that we're seeing with the shelter-in-place orders that we're seeing and the closure of non-life sustaining businesses. There's just simply not as many people driving as much anymore. If you look out on the road, you'll just see a noticeable decrease in the volume of traffic and driving that you're seeing. And we understand that when rates were filed for us for approval and we approved them, those were built-in assumptions on driver behavior, X amount of miles driven every day, to and from work, the like. Those assumptions may not prove to be accurate, that instead of driving to work, you might have people who have been at home for 2, 3, 4 weeks and have not really driven their car at all. And so we would anticipate that claims frequency will likely decrease during this period of time. And I think that's a logical extension of the notion that if there's less people on the road, there's less likelihood of vehicular accidents. And so we would expect that insurers keep an eye on this, review this impact, see what the driving behaviors are. And if it's possible, we would expect that you adjust your rates accordingly. We have seen a handful of filings that have come in recently, and I'm not sure if any of them have been approved or not, but I know that they are forthcoming, where some insurers have realized that, the assumptions they built in for the month of March or the month of April, based on someone driving to and from work every day, simply ended up not being the case. And we have seen some rate reductions there. Again, we want to make sure that this is done responsibly. And we want to make sure that, this is done actuarially soundly. But we would encourage insurers to kind of take a look at this issue. With claims frequency possibly coming down, perhaps it is appropriate to adjust your rating to account for the fact that the assumptions used in rating are simply different now, given the widespread disruption caused by the COVID-19 pandemic. At the same point, you have people who aren't driving, certainly. You see just a huge decrease in the volume, but certain specific areas are seeing a noticeable uptick in the amount of driving, specifically if you think of delivery drivers or volunteers who are helping transport essential goods, foods, medication, things like that. Often, this is kind of a couple of different, you have the food delivery drivers, you may have people who are delivering essential goods using their personal vehicles because of the strain that COVID-19 disruption has put on the ability to use a company car and the like. And what we certainly are aware of in the market, particularly, obviously with regard to personal automobile policies, is that we know that there are exclusions for commercial activities. So, you think of the average delivery person, those folks are generally excluded under their personal automobile policy. Again, we would encourage insurers to really, really take a hard look at these exclusions and to work with your customers to make sure that these exclusions do not get in the way of the delivery of essential goods such as food, medical equipment, medical drugs, and the like. What we want to make sure is that that people who want food delivered can get it delivered. People who need medical supplies can get those medical supplies. And what we do not want to see are these drivers who are delivering these essential products and these essential goods being concerned to do so out of fear that they may have a liability exposure there that is not covered. As always, we're encouraging the consumers in this marketplace to reach out to you folks to explain what their circumstances are so that insurers can work with their clients to come up with innovative, unique, and tailored solutions to this issue. This is another area where we have seen some insurers come to the department with new attachments or riders that they're adding to their policy to remove the livery exclusion during the COVID-19 pandemic. We applaud those insurers for taking that step, and we would encourage all other insurers to look at that and see what you can do. Again, to make sure that essential goods, medicine, medical devices, the like, even food, is being delivered, and that we are not unfairly burdening the drivers who are undertaking to provide these essential services. I think the last specific area of guidance that we would like to touch on is flexibility in regards to the fact that a lot of non-life sustaining businesses have closed. Specifically, we've seen car dealerships close, and we've seen some repair facilities close. And this obviously presents a difficulty to your insureds in the sense that if you had a vehicle that was dropped off at a repair facility and you were provided a rental car, and now that repair facility is closed, well, you're stuck with a rental car that you can't really return, and your personal car is stuck at a facility that isn't open right now. And this is going to cause some practical some practical concerns for some folks who've had auto claims recently who are still getting their cars fixed. So we would encourage companies to take a look at this issue and, again, to work with your policyholders, particularly on limits for rental coverage and items like that. Again, what we're trying to do is minimize the impacts to the insureds who are being put in this situation through no fault of their own. If you happen to drop off your car for repair the day before a repair shop closed in response to the governor's order, I mean, that's not that's not the insured's fault. And what we don't want to see, particularly given the, in light of all of the disruption, what we do not want to see is insureds being put in a tough predicament with unexpected bills for things that weren't caused by them and that were not reasonably foreseeable. I know that some insurers have already started working on this issue. Again, we applaud those efforts. And for those of you who haven't thought about this issue or haven't looked at it, I think you really need to take a look at this and see where you can help your policyholders and what you can do with them. And that's basically the guidance in a nutshell. I will say this in closing before I hand it back over to Mike Humphreys. As we've stated in the last Q&A, as we've stated in some of our, many of our notices, we understand that the COVID-19 pandemic has led to a disruption for everyone. Consumers, regulators, insurers, licensees, and the like. And we understand that these are difficult times and times which none of us have really experienced before. And this does require some unique solutions. And there are going to be problems that a lot of us just didn't think about. What we encourage you to do is where you folks run into these problems, whether that is, oh, we didn't think of this, or hey, we're running into a regulatory problem trying to work with our insureds to give that flexibility. Just let us know, and we'll see what we can do to work with you. Because at this point, again, it's going to take everyone involved. It's going to take the consumers calling you up and explaining their personal circumstances. It is going to take us working with you, and it's going to take you folks developing innovative and unique ways to approach this. So as always, communication is important. It's important that we understand what barriers you folks are running into or problems which you're seeing being common amongst your insureds. So as always, please reach out to us and let us know what your concerns are. And with that, Mike, I will turn it back over to you.
Great. Thank you, John. So now we will move into the question and answer part of this webinar, starting at the top. How does one sign up for press releases? You can email the department to sign up. It is R as in Rachel, A dash I, N as in new, dash press at pa.gov. Are in-person visits to existing customers allowed, i.e. risk management services? I think there's really two questions here. In-person visits to existing customers allowed. The order is specific that in-person sales and brokerage is not allowed. The second part of the question, though, talks about risk management services. So if I am sending out someone to talk about work comp risks, for instance, at a life-sustaining business, I think that is something that would be permissible under the existing order. Does John or anyone else from the department want to weigh in on that? Okay. Moving to the next question. Actuarial reports supporting the statement of actuarial opinion is typically due by May 1st. Is there any discussion on delaying that deadline given current events? How about allowing electronic copies versus hard copies? I'm going to go backwards on that. As we mentioned last week and have put out guidance, we are moving towards allowing electronic copies of filings where possible. However, we have not looked at blanket delays or extensions at this time. With that, I'll turn it over to Joe DeMemo to see if he has something to add.
Yeah, the only thing I would say, Mike, as you indicated, there have been no blanket extensions at this point, but we are flexible in regards to information that is required to be submitted by a certain filing date. So to the extent that a specific requirement cannot be made, I suggest you talk to your analyst that you've been assigned for your specific company and make that case to them. Again, we are flexible in regards to what the acceptance of extending deadlines. We don't want to put a blanket out there right now. To the extent it is addressed by the NAIC on a national basis, we'll report that and provide that in some additional guidance. But as of now, that is not the case. So if you have a specific company that is not going to meet that deadline, my recommendation is you talk to your analyst, you have a discussion with him about the time frame that you expect it will be done, and let him address that from that perspective.
Thank you, Joe. The next question relates to the PennDOT guidance and asks whether this includes vehicle registrations also. I'm actually going to read from their website. We do link to their website in the guidance that we will provide. And the short answer is yes. It says vehicle registrations, safety inspections, and emissions inspections scheduled to expire from March 16th through April 30th. The expiration date is now extended until May 31st, 2020. So you will get that in the guidance or a link to it in what we ultimately send out, but just wanted to answer that as directly as next question. Are you going to require personal insurance carriers to cover drivers who are delivering food goods during this time? I think you heard John mentioned in his preliminary statements that we are encouraging carriers to look at it, not so much requiring. We've heard from a couple carriers that have already indicated that they plan to extend that coverage to allow the limited commercial business for this emergency period of time. But again, it's a strong encouragement more than it is a requirement. Did John or anyone want to add to that?
Yeah, the only thing I would like to add to that is, again, at this point, we are not mandating coverage for any specific item outlined in our guideline, obviously, with the exception of the expiration of the driver's license. That being said, what we are doing right now, and this is kind of echoes what I said on the last Q&A, is we are evaluating what carriers are doing. We are evaluating what's happening in the market. And right now, we still believe that the best way to address the multitude of issues that has been raised by the COVID-19 disruption is on a case-by-case basis, understanding that no one-size-fits-all approach is going to really work here. That being said, we do keep all of our regulatory tools on the table, and we can revisit some of those issues if we determine that there is a true problem happening right now in the market. The auto guidance is kind of our way of communicating what we've been seeing and what we've been hearing to industry to put it on your radar so that you're aware of some of the questions that are coming up. We're not, again, mandating specific coverage. We're not mandating that you do a specific thing, but this is the way we communicate our expectations. And our expectations are that you will take these things into consideration, you will consider them, and you will come up with some way to address them. Again, if we're not seeing these things being addressed, or if we see bad behavior in the market, then we will look at what other policy tools we have. But no, to answer the question, we are not currently mandating this coverage.
Thanks, John. On to the next question. With restaurants limited to takeout and delivery, are there any temporary forms filed offering hired and non-owned auto coverage on a BOP policy for 60 or 90-day period? I don't know the answer to that. I'm not sure Shannon will either, but Shannon, does that sound familiar to you?
Yeah, so we'd have to spend, of course, more time looking at it, but the ISO hired auto and non-owned auto liability endorsement may provide the necessary coverage, but we want to make sure that everyone's talking to their workers' comp insurer about the changing employee responsibilities and classifications.
Very good. Thank you, Shannon. Next question. There have been a lot of discussions regarding insurers' position on first-party loss of business income claims. Have there been discussions from a liability third-party side of the policy? If it is claimed that a party became infected with COVID-19 from an insured's premises, did an occurrence occur? Applicability of med pay coverage. John or Shannon, do you have an answer to that?
Yeah,
Or
I can
Okay.
take a crack at it. You know, we have heard a lot regarding the liability issue, business interruption coverage, as I'm sure all of you are hearing. And this is a really multifaceted issue here because we have perhaps pandemic exclusions. We do have the issues surrounding what is an occurrence, what's not an occurrence. We are seeing some legislation making its way around some states. We have seen a little proposed legislation here. So there's a lot of moving parts to this right now. And unfortunately, it's difficult for us to say whether or not something's been an occurrence. And that's really for two reasons. The first one is we're reviewing the policies just like the rest of you and trying to take the unusual circumstances of COVID-19 and apply them to forms that may or may not have contemplated them. But more fundamentally, the department cannot tell you whether there has been an occurrence or not, just the same as the department cannot tell a consumer whether or not there has been an occurrence or not. The department cannot make coverage determinations. We cannot interpret policy contracts. And so at this point, what we expect is that you make those determinations yourself and that you're processing on a consistent basis and following all of the other requirements contained in our law with regards to processing and handling claims. I know that's not, a direct answer to it, but that's at this point, review your forms, review the case law, make your determinations, and make sure that you are processing consistently.
Very good. Thank you, John. John indicated that insurers should consider not raising rates on auto policyholders because of a negative change in credit score. I understand that the PID does not allow the use of credit scores at renewal. Is that accurate? Yes. Shannon or John, did you have anything to add?
Nope.
Nope.
Very good. Regarding credit scores, has the PA Banking Commission offered guidance to banks on managing COVID hardship? I believe they did put out some guidance on their website, but I don't have that in front of me or handy, so you may want to check the banking department's website. Does anyone else from our team have any comment on that? Okay, we will move to the next one. When insurance scores are ordered through one of the three major bureaus, carriers have little to no insight as to how low scores are affected by recent events. I'd suggest a mandate to the credit bureaus that they suspend transactions occurring between 316 and blank from working their way into credit insurance scores generally. Then all carriers are on a level playing field and no one is worse off than any of the others. This may require NAIC coordination so that all states can work together. I appreciate that comment, and that's certainly something that we can look into. So appreciate that. Anybody else want to comment on that? Okay, we will move to the next one. Does the department want insurers to file to remove the delivery exclusion, or can we handle them as they come up without changing our policy language? Shannon, I'm going to pitch that largely over to you with the caveat of we've really heard from carriers that I think are on either side of that. I think some intend to make a filing, others do not. They are approaching it from a non-enforcement perspective and giving kind of defined dates being some period after there is an end date to the declaration of emergency. it may be cleaner to have it as a filing, but I think either way you get to the spirit. But John or Shannon, did you want to
Yeah, thanks so much. I was going to say the exact same thing that we've seen them come through with filings. It would make it cleaner from a claims perspective, and if there are any complaints, so we understand exactly what was filed and what was provided as a benefit to the insureds. So I would agree with you. We prefer the filing more than anything else from a claim perspective.
Okay, next question is the department looking to mandate business interruption insurance, liberalizing livery exclusions in auto policies or any others? I think this is one where our approach has been that we're looking at it on a complaint by complaint basis, on a policy by policy basis. As you can imagine, we do now have a number of comments or complaints about business interruption, both generally and specifically. But at this time, our approach has been to handle those on a complaint by complaint basis. Did anyone else want to supplement that answer? Okay, we will move on. Regarding claims frequency, there are multiple other issues that need to be considered. Market impact on issuers' investment portfolios, economic impact of customer forbearance programs, declining sales premiums, etc., increased repair costs associated with supply chain labor force issues. No one has a firm handle on all the ramifications, so it's difficult to assess rate reduction. If a carrier reduces rates based upon the uncertainty, will the department allow rapid return to current rates when things settle down, or as more secure information becomes available? Shannon, I'm going to pitch that over to you, but again, butt in myself to say that to the extent that a carrier is looking to bring these factors in the form of a rate reduction to the benefit of the consumer, we can certainly have those conversations as you look to bring them up to a quote unquote normal rate when that time presents itself. Shannon, did you want to add to that?
Not a whole lot to add. Just agree with you that we understand there's going to be uncertainty as long as the information can be provided to at least provide what they feel is the best justification for the rate. And of course, we're going to do our best to make sure we're staying on top of what's being submitted, knowing that the market is constantly changing, the risks are constantly changing, but definitely we'll be able to at least work with every one of those filings, give good communication back and forth as to what's needed, if anything, to justify them.
Very good, thank you. Are there accommodations for holding company filings and getting filing fees in? Do we need to write a personal check on behalf of my company to get my Form BC annual filed timely? Joe, I'm going to pitch it over to you.
Now, when you say a personal check, I'm assuming that is maybe a CFO writing his own personal account check to pay for the filing because he's unable to get a check cut from the company. If that's the case, the answer to that would be no. To the extent that you have any type of issues associated with filing the holding company requirement, and you're not going to meet those, you should, again, talk to your analyst about that. But to the extent that you are going to send in a file of B and C, the check should be attached to that. There is a check requirement. Generally, they're attached to the filings that are submitted. If it's going to be late submission, talk to your analyst, and we can accommodate most of those. To the extent that you can submit the filing electronically and you can't get a check and you have to write it personally, we can wait for the check.
Very
That's
good.
it, Mike.
Thanks, Joe. And the one thing I will add from just a department-wide standpoint is that we are looking at different availability to pay invoices electronically to the department. We're at the early exploration stages of that, but as you can imagine, the NAIC has certain functionality that may be available to us in the future. So we are going to kind of continue to go down and explore those avenues to see what may work in terms of providing carriers additional options with how to pay the department electricity. The next question, multi-state writers are starting to see other insurance regulators sending out surveys. Isn't this type of survey / data call to be coordinated through the NAIC? And the answer there is yes. And that's beginning, I think, as of last week. There are now a select number of issues, I think, in terms of financial data reporting, and potentially others, that there are a group of regulators trying to work on a pretty quick turnaround time to standardize the type of data calls that would go out, and potentially even provide kind of reference to the home state of the insured and getting that out. So the multi-state writers don't see 51 different requests for similar but not identical information. Joe or anyone else that has maybe been a part of any of these calls, is there anything that you'd want to add to it?
Yeah, I can speak to that, Mike. Yeah, we've been meeting with a working group over the last week trying to develop a template that could be used by all regulators and to be used using the lead state concept so that you don't have multiple states asking for the same information. The idea is to have the lead state, if it's a group, send out the survey, collect the information, upload it to the NAIC system, that the folks who have a need to look at that information are able to review it, to eliminate the duplications that have currently been, I guess, pretty much common across the board. The first request of information is going to be focused on operational concerns related to the continuity of operation plan, and it's actually, you know, not asking to submit a plan. It's asking to provide a narrative of what you're doing, how it's working out, what concerns you have, and you know, how you're dealing with third parties who are administering part of your business, and the cybersecurity concerns that may be part of that. The other piece of it that is in the hopper right now is the financial concern piece. You know, in regards to how is your business doing, what concerns you have you done any stress testing on certain lines of business that are important or are significant to your company? And it's information in regards to that. And it's, again, it's a narrative as opposed to give me everything you got in regards to stress testing. The hope is that we'll conclude that template this week, and that beginning April 1st, the first request of information related to that will be sent out. Now, keep in mind, to the extent that there are states that have already asked for that, you can just refer to that and say, I provided this to such and such on certain date. But to the extent it has not been provided, it's going to be conducted through the lead state concept, and that you'll be contacted once to provide that information, and that information will be shared with the appropriate other states in a multi-state group. To the extent it's a single state, you're probably going to get it from the domestic state in regards to what that information they are interested in providing. That's it, Mike.
Thank you, Joe. And the next question is, how is the flexibility on insurers going on consumers who are struggling to pay current monthly premiums due? And I think that's a question going to the flexibility that we're encouraging carriers to provide, and that we, the department, are kind of looking at on a complaint basis and watching for this type of complaint that may be triggered by a policyholder believing that their treatment or their carrier did not provide sufficient flexibility. I think to the credit of the industry and those on the call, so far we have heard more from the companies on being flexible, on offering these additional riders to make sure people can deliver food and medication, make sure some of these discounts are continuing even when a child may not be at school, and then also talking to us about different payment plans. Some have announced already that they're not going to be charging interest or penalties into June, I think, is one of the latter ones that I've seen. And certainly working with their policyholders on payments in between now and then, or even pushing off payment due dates. So that is something that we're going to continue to monitor, and we would encourage carriers also to reach out, and you can reach out to me directly to talk to us about the flexibility that you've made available to your policyholders. But so far the industry has done a solid job at providing that flexibility from those that have reached out to us to have those conversations. And the few complaints outside, I think, largely business interruption coverage that we've received at the department. And actually, there was a question that looks like a follow-up about the checks coming in for Form Bs and Form Cs. And I would ask the questioner to just go ahead and reach out directly to the company analyst or to Joe to talk about that. Thanks. The next question. Will all the Q&A be emailed or posted somewhere? I think that's something, and Ron, I'm going to pitch this question over to you, that PAMIC is working on developing, which is, as you all can imagine, kind of transcribing an hour of conversation can be a significant challenge, but wanted to put that over to you, Ron.
Well, thank you, Mike. The simple answer is yes, but with three parties involved, the Insurance Federation, PAMIC, and the Insurance Department, we need to make sure that the responses are vetted appropriately. However, the recordings of these calls are available or will be available on the PAMIC COVID-19 webpage. And if you don't know how to get there, just go to the PAMIC.org site, and at the very top, there's an orange bar that takes you to it, and you'll be able to see those recordings.
Very good. Thank you, Ron. The next question is, can you summarize the most common type of complaint the PID is receiving since the pandemic started? Chris, I'm going to go to you. I think that the most common type of complaint, we've talked a little bit on the health side last week about telehealth concerns, particularly related to behavioral health providers. But that was an early on complaint, probably from 2 weeks ago, that the carriers responded to pretty quickly when we reached out to them one-on-one and then provided additional guidance at the beginning of last week, such that I don't think that we've received a complaint along those lines in the last several days. The second most common that comes to my attention, obviously, is business interruption, and whether and when the policies provide coverage. Unfortunately, in many cases that we've seen, the coverage was specifically excluded situations like the one that we're dealing with today. Chris, did you have anything you wanted to add on the complaints that you're seeing?
No, I think that covers it. It's a fluid situation. I know we're getting new types in some questions now on co-pays and co-insurance, but no, I believe that the two that you referenced really have been the ones that we've received the most of.
Very good. Sandy, we're bringing you back. CMS's most recent guidance 324 allows issuers to extend payment due date prior to grace period being triggered. Our understanding is that PID supports the same. However, the CMS guidance does not allow extending the grace period once it is triggered. Would the PID be okay with issuers extending the grace period itself once it is triggered for on exchange without subsidy members and off exchange members? And I think that the department is more than fine with flexibility as a general rule as we're all trying to navigate the COVID world. But I don't know if the commissioner or Sandy had anything to add.
This is Sandy, and I'll just comment that with regard to the on-exchange policies where you're looking at the 30 and then the additional time period after that, those periods are regulated by the federal regulations, so we don't have a lot of flexibility there. The CMS guidance did focus on delaying the trigger, the start date for the grace period, as the best way to address that issue. Off exchange, we may have a little more wiggle room. And if you have particular questions, I'd encourage you to submit those to the department so we can work through them with you.
Very good. And I think the last two questions are actually the almost identical questions submitted by two different people. Is Pennsylvania looking at moratorium on canceling policies, raising rates at renewal, etc.? I think is generally the gist behind both questions. And I think on these issues, the department is kind of in a position where we're monitoring complaints, we're monitoring marketplace activity, and we are trying to provide guidance to you all and to consumers as quickly as we can. As we identify issues, we're trying to address those publicly for the benefit of policyholders and companies. So we will continue to do that monitoring of the marketplace. Commissioner or anyone else wanted to weigh in on that? Okay. Seeing no more questions and butting up against 3:58, I want to thank everyone for their time today, and I will pitch it back over to the commissioner and or Ron.
Thanks, Mike. This is Jessica. Nothing much to add, just again, thank you, and we look forward to hearing from many of you and hearing your questions, or you all sharing how your company is choosing to respond to this rapidly changing world for the betterment of your policyholders. So please do be in touch, and we look forward to continuing to be a resource as we can as this moves forward. And have a great rest of your week. Thanks. Ron.
And Sam Marshall here. Thank you all very much. And we do have a couple of questions, some for John Lasik in particular. And John, I'll just email that to you.
That sounds good. Thank you, Sam.
Once again for participating. The next call will be at the same time 1 week from today. And we want to just thank everybody for taking time out of their schedules. Have a safe and productive week.
Thank you.
Be well.